Hey, good morning, everybody. This is Brittany Jennings coming to you live from the Seniors Blue Book. And today I am joined by Greg Raymond of Florida Financial and Insurance Group, as well as Florida Medicare Group. So welcome, Greg.
Thank you. Great to be here.
Awesome. How are you today?
I'm doing well. It's a beautiful day. It's cooling down just a little bit.
That's right.
Can't complain.
And you're in your new office.
That's right. Brand new office on LJB. That's our road office.
Not enough coffee.
That's our road office.
That's
okay. La Playa Plaza on Tamiami Trail in Port Charlotte. It's becoming a true office finally, and we want to invite everybody to stop by and say hi. Don't go to El Jabin. We're not there anymore.
No. I mean, you could go there, but you're not going to find Greg there.
That's right.
So we'll make sure that we add in the post the new office address, of course, for your group here. So we're going to talk about both businesses, but for the first video segment that we're going to do, we're going to talk about the Florida Financial Insurance Group. So without further ado, do you mind if I jump into some, I think these are everyday questions that clients would come in and ask Greg.
Yeah, absolutely.
So we'll just, we'll do a little bit of role play.
Sounds good.
So I don't have a ton of money. Could I still be a client of yours?
Absolutely. You hear on radio and TV people say, if you have $500,000 saved, we'll talk to you.
Yep.
Oh, well, we're not that way. If you have $50 saved, if you don't have those $50 saved, we'll help you get the $50. We want to help people who need it.
Yep.
The person who has, they're 60 years old and they have $5,000 in the bank and they're frantic, what am I going to do about retirement? They need help probably more than the guy that has $500,000 in the bank. And it might not be enough commissions or whatever for the big guys, but I've worked with all those big guys, and that's why I'm here, because we want to do what's right for the client. We want to help people who really need help, and no matter whether you're a 21-year-old or a 85-year-old that needs any investment advice, any suggestions on how to make their retirement better, give us a call.
Awesome. That sounds great, because I think you're right. I think a lot of times it's a little bit intimidating to if you don't have that large lump sum to come in and make that first step and say, well, I've got $10. What do we do?
What do we do now? And,
make me a millionaire.
And we come up with a plan. We don't, if you have long enough time, we can make you a millionaire with that $10. But it's taking that first step.
Mm-hmm. And this, if only this was true, I am nearing retirement. Funny, right? Maybe if I hit the lottery, right? How do I need to adjust my investments if somebody is nearing retirement?
The older you get, the safer you go with your investment. We call it safe money. Okay. There are some terrific investments out there that guarantee you're not going to lose a dime, and it gives you great opportunity for earnings still. There's something called an indexed product where you put the money in to an index, like an S&P 500 or something similar. It grows based on the growth of that index. But then it gets locked in. When the index goes down, you're still there.
Okay.
Then it goes up the next year, then you go from there. So you never lose any money.
You never go backwards.
Yes. The stock market, some people have great success. I get a call from people, I just made 25% this year. And then the next year I get a call, I just lost 22%.
Exactly.
This takes the ups and downs. And I'll tell you, a good steady growth is better than the ups and downs every time.
Exactly. And depending on the people's, level of risk or...
Exactly. And if you're younger, you can take more risk because you have a lot more time. You're going to be working for the next 50 years, so you have a long time to go. So if you lose a little bit, it's no big deal. The general rule of thumb is you take your age minus 100,
okay,
and you can have that much at risk. So if you're 50 years old, 100 minus 50, you can have 50% at risk and have 50% guaranteed. As you get older, you want more safe. So if you're 80, you only have 20% at risk and 80% guaranteed. I would argue maybe more as you get that age, but that's the general rule of thumb.
I've never heard that, and that's a great rule of thumb for a lot of people, because now, that helps me assess my own risk.
Well, the other thing is people think some of these guaranteed products, you're never going to make any money. They think of CDs making 0.5%. That's not the case with these products.
Okay.
I have people making 10, 12% where it's guaranteed not to go down. They're not guaranteed to make that 10 or 12%, but they're guaranteed that the money will never go down. So as it goes up, it gets locked in and can never go down.
I think a lot of people feel like a peace of mind or can sleep a little bit better.
Absolutely. Absolutely. I'm that way. I'll be working for, even though I'm old, I'll still be working for a long time. See the gray hair?
That might just be from stress. You never know.
That's probably true.
So what's the best way to leave my kids an inheritance?
Oh, absolutely. No question about it. Life insurance. And you got to have the right kind. I don't mean necessarily paying, premiums all the time. People tell me, I have $100,000 in the bank that I want to leave my kids. I'm not going to touch it. I'm just going to leave it to my kids. Well, when you leave it to your kids, that $100,000 gets taxed, becomes $50,000.
Wow.
And, great, that's super, but you just gave away $50,000.
Right.
If you put it into a single pay life insurance policy, depending on your age, that $100,000 probably became $130,000, $140,000 overnight.
Wow.
And it gets passed tax-free. So you took away the $50,000 inheritance you were going to give them and made it $130,000, more than doubled it.
Wow.
I mean, it just makes sense.
It makes total sense.
So why have the money just sitting there and have it taxed when you pass out? It's already been taxed. You already did your fair share.
I know. That's right. We pay enough already.
That's right. Don't let your kids have the money. Don't give it to the government again. I mean, that's not a anti-government statement in any way, shape, or form. But you paid taxes on it, so keep it in your family.
Exactly. And I think coming and talking to you is a free consultation, right? To just
Absolutely.
come out and see what the options are. So
No
why would
obligation.
you not if you have an investment you want to pass on?
We don't twist your arm. Maybe just a little. No, just kidding.
Is there chocolate?
Yes, we do.
I can be twisted.
But no obligation, free review. Just we tell you what we think. We tell you why we think what we're telling you. But it's your decision. I'm not going to try to talk you into making an investment or any kind of move like that, because ultimately it's your money. You got to do what you want to do. My job is to tell you, based on years of experience, what I think is best for you.
Okay. Well put. Well, I've heard about life insurance for grandchildren. So is this something that they should have, through generations?
It's a great time to do it, and people don't want to think about grandkids' life insurance. It's just like a bad thing. You don't want to think about it.
It sounds premature, but...
Yeah. But, okay, first of all, the sad reality is something can happen. And then not only are you mourning the loss of your grandchild, you're having to come up with $10,000, $15,000 for a burial. So, but that's really secondary to what we're talking about. What we're talking about life insurance is, do you know, I have clients who are spending maybe $30, $40, $50 a month on their grandkids for insurance.
Wow, it's very inexpensive.
By the time they are ready for retirement, they're going to have over $1 million guaranteed in the bank account.
Wow.
So talk about setting your grandkids up for retirement.
You start early.
You start early, you put in, $30, $40, $50 a month, and they will have $1 million cash. Depending on circumstances, everybody's different.
Sure.
I'm not. Don't hold me exactly to the numbers yet, because your situation could be different than your neighbor. But that's phenomenal, where you can make sure the stress already of their retirement is gone because of you. That's a great feeling to change your grandkids' lives
for minimal.
Yeah.
For what it might cost to go to dinner a month.
Exactly. Change your grandkids' lives forever.
That's right.
And if they do pass away with their, when they're married and have kids, well, that $1 million, you also have insurance built in, so their wives and kids.
Coverage.
Yeah, it's double coverage. So you're taking. It's a generational thing. You're taking care of several generations by doing that.
I love it. I don't have kids, but I have pups. I have dogs.
I don't think we have coverages for them.
Yeah, maybe not. Maybe a new business adventure for somebody. So if somebody cannot afford long-term care insurance, are there other options available?
Well, affording, and there's other things. People have to be so healthy to get approved for long-term care insurance. You could, I assume. I don't know your health, but you're young and look healthy.
Will they let that slide?
Don't let that go. I'm fairly healthy. I could not get approved. I'm 59. I just turned 59. I almost said 58. 59 years old, and fairly healthy, but obviously a little bit overweight and things of that nature. I couldn't get approved. Not you. What are you talking about? You're making me feel bad.
It's the keto diet. It's killing me. 2 months ago. No, I'm just kidding.
Well, it's so hard to get. And then, let's say I do get approved. Every year that premium's going to go up and up and up. By the time I really need it, when you're 75, 80 years old, it's so expensive you can't afford it.
Right.
I see people all the time that have had long-term care insurance their entire life, and by the time they're ready to use it, they can't afford it and have to let it go.
Right.
And you don't get that money back. It costs you thousands and thousands and thousands of dollars.
I've seen that with clients, or it's lapsed.
Yes,
and,
absolutely.
Because the spouse used to pay the bills, and that spouse maybe passed away, and the widower didn't know about it or didn't know how to pay it.
Well, you have options. There's first option is a product that we have that I'm really excited about. It's not long-term care insurance, but it's a home care alternative.
Okay.
So it allows you to hire some of the different home care companies in the area. You pay a small monthly amount. It doesn't matter your age. It doesn't matter your health. And this allows you to have home care people come into your home and help keep you in your home for a whole lot longer. And again, it doesn't matter about how healthy you are. They don't ask you health questions. They don't ask you your age. It doesn't matter. But it starts at like $90 a month.
Wow.
And that's a great way to keep in your house a lot longer.
It is.
Towards the end of your life.
And maybe this is a detailed question, or maybe not, but about how many hours, like a week, or
it's a lifetime thing. It starts at it's like 15, 20, up to 45,000 hours.
Wow.
That these plans buy, depending on which package you get.
Okay.
And it's an hour thing. So as the expenses go up, 20 years from now, it still goes up. It's still hours, so it's not this much dollar worth. It's these many hours. Right. So even if the cost doubles, you're still getting the same amount of hours. That's something that we've been getting a lot of phone calls on. We're excited about that. But if you want long-term care, there are alternatives as well. The biggest thing I hear is, I don't want to go to a nursing home, and why should I pay $1,000 a month or $2,000 a month for this long-term care? I may never use it, and I don't want to use it. Well, there's two alternatives. You can have long-term care coverage attached to an annuity or to a life insurance policy. That way, one way or the other, you're going to get your money.
I think that's the biggest thing, is people want to make sure if you're putting money into something that they're going to get it back somehow.
Yep. Well, like say you have an annuity, and let's say $250,000 annuity. Okay, so you put $250,000 into this annuity, and then you need long-term care coverage. Well, depending on the exact plan, that $250,000 will either double or triple, and give you, $500,000 to $750,000 worth of long-term care coverage.
I've heard about these. Another name is like a hybrid?
Yeah,
like
exactly,
okay.
exactly. So one way or the other, either you can use it for long-term care coverage. If not, you're growing and keeping it as an annuity. You don't lose it if you never use it.
I think that's attractive to like the baby boomer generation, and then to my generation coming up, because that you're kind of covered either way. And
then there's a very similar thing that's attached to life insurance. So, if you end up in a nursing home and you have I'll just say the same figure, $250,000 life insurance policy, that will be same $500,000, $750,000. But if you don't use it, your family will get the money because it's in a life insurance policy.
It's another form of inheritance.
Exactly. It's so you don't necessarily won't see it, but your family will. So again, you're not throwing the money away to insurance companies. So there's some great options. Unless if you tell me, hey, I'm independently wealthy. I don't, really, an extra $3,000 a month I don't even think about it. Well, then you need to look at long-term care coverage if you're young and healthy.
Right.
If not, I think there's far better things to do.
Okay, it's all situational depending on what the person's goals are and what they.
Everybody is different. We could take all the staff at Senior Blue Books and line them up here, and everybody would have a different policy probably, because everybody's situation is different.
That's right. Shout out to my SBB family.
That's right.
All right.
Come see us.
That's right. We'll set up a little pizza party. Oh, it's not keto though, but we'll figure it out. Greg, we are going to close out with Florida Financial, and then we are going to actually come back and we're going to talk about Florida Medicare Group. So everybody stay tuned, and we will definitely put all the information for your office, your new office, and your phone number and everything like that for Florida Financial as well.
And as we go into Florida Medicare Group, it's open enrollment season.
Oh, open enrollment.
Lots to talk about.
That's right. So we'll be back in just a few minutes, everybody.